Toronto's condo market is in recessionary territory as investors can no longer prop up the market. I didn't use the R word. Toronto Star used the R word. And it's actually a very catchy headline because we are basically heading towards that. As kind of Canada as a nation is heading towards a very, I would say, a hard landing, despite what people want seeing a soft landing. It's going to obviously affect the condo market because it's very investor driven, right? So the idea that investors can't prop up the market anymore generally kind of talks about how, hey, there could be a potential sell-off. And I'm going to be breaking down what the condo market looks like right now as it's in the recessionary territory. Now, if you're looking for some help on how to navigate the real estate market, especially this coming fall market with, if you have a condo, or maybe if you're trying to move from a condo to a freehold, which I think there's that minor little bit of opportunity. If you can still make the numbers work, I would definitely do so. And you'll see why I talk about that in this video later on. And if you want to chat with me, you can do so by booking a call using a link that's on the screen right here. It's www.chatwithzen.com. Simply click on the date and the time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and if you're enjoying the content I'm putting out there, do me a favor and like and subscribe. So the article we'll be reviewing today is Toronto's condo market is in a recessionary territory as investors can no longer prop it up, a report says. This is from Urban Nation. So I agree with this headline. It's pretty catchy. But I wouldn't say it's like a doom and gloom for everybody who owns a condo, right? You have to keep in mind, it's like either you bought something pre-pandemic or post-pandemic, because anyone who bought something pre-pandemic is still in pretty good shape. It's just post-pandemic, we're seeing some problems right now because prices escalated, right? So we can't bucket all the condo investors into that. But there are a large majority of them with new finishes right now with the high interest rates that are coming into a little bit of trouble, right? So here are some interesting points I highlighted for you. So while the low-rise market is performing well, low-rise being like houses, townhomes, detached semis in the city, the condo market is in recessionary territory. And I've talked a lot about this, even like way back in the start of the year where I said, look, I think there's gonna be a bifurcation or like a splitting of asset types in this year where I think the freehold space is gonna keep rocking and rolling because there's just not enough of them and people are moving up and then demographics change and millennials buying homes and stuff. Whereas condos, we're gonna have too much of them, right? And this chart basically is gonna just illustrate it for you. You can see the condos over here have 6.5 months of inventory in the 416. That's really high. That's essentially like official buyer's territory. And I would normally have said like, Toronto's in the buyer's territory, like 3.5 to 4, right? Normally. And you can see the freehold space is at 4. There's a really big change in terms of like how much inventory is in each side. This is what I've been telling you for the last whole year, I guess. Sales for condos aren't moving as fast as freeholds, and there's a lot more condos on sale. So therefore, there's such a separation of numbers, right? So that's what we have to watch out for. And I think that we're going to continue seeing this in the future. Now, as interest rates climb, more investors haven't been able to fully cover their mortgage costs with rent, leading the market to become flooded with inventory. So meaning that the idea that investors were buying these like years ago and that they would just break even or provide a little bit of cash flow positive doesn't exist anymore right now because of interest rates, right? So if we look at the charts over here, you can see that these are condos that are being completed, meaning like, they just got built. But like when the investors bought them, you have to keep in mind like just 5-6 years before these were completed. So you can see like if you had a condo complete around pandemic time, 40% of them were cash flow negative, right? So, maybe bought in 2015, 2016, and this all makes sense. But you can essentially see that as you're getting completions in 2023, which some of them were pre-pandemic, it's just that interest rates now were really high. 77% of them are basically cash flow negative. And now this year, the first half, 81% of them cash flow negative, which is a startling amount, right? So this is what I was saying in the earlier of the video. You can't bucket all the condo investors into like, hey, everyone's bleeding. It's when did you buy your condo and are you cash flow negative? It's just anyone who has recently completed a pre-construction, they're in this boat in this chart, right? And to break down this chart some more, and this is why I'm saying there is some equity, all condos are in this, and you can see that a quarter of the condos have no mortgage. So, they're rock and rolling. And then you got 20% of them are cash flow positive and 60% of them cash flow negative. Now you may say, hey, Zen, that's quite a lot of number, but you got to look at kind of like the amount that they are cash flow negative, right? So this is a good chart to show that essentially right now, the recently completed ones, 30% of them are more than $1,000 cash flow negative, which isn't great, right? Which is why, holding them doesn't make any sense because you're essentially losing like $12,000 per year. And if the outlook for condos isn't great right now because, we have so much supply coming, interest rates, yes, they're on their way down, but they're not going to fix your cash flow negative situation, and there's no appreciation, it may not make sense, right? So like maybe if you're in like the 500-600, depending on your size of your mortgage, your principal recapture, meaning like how much the tenant's like rent pays off the mortgage, is making sense for you to still hold it and you're just breaking even. And then everything above that probably doesn't make sense. So that's why you're seeing a lot of inventory come on the resale market. Now, there's still quite a bit of them that are cash flow positive right now. So again, it just depends on when you bought that property, and there are some stuff that took super long to actually complete. So some people are in this bucket, right? But you see, not many. Now, here's kind of the interesting thing, and I've talked about this many times before, but I'm just using this article as a way to illustrate this. At the same time, investors in the pre-sale market, where they make up 70% of the buyer pool, are unable to buy units, and developers can't drop prices due to exorbitant costs. And I've said this before, like, let's say your average to build something is $1,000 in Toronto right now. A third is taxes, a third is like hard costs, and a third is a land cost, right? So amongst that $1,000, it doesn't have the builder's profit. So if the builder doesn't have profit, generally the commercial banks will not lend to them. So usually their profits are between like 8 to 15%. So that's how you have like 1,200 square feet for, like a condo to make sense. But if they can't even sell those right now, the lenders won't lend to them at that, which means that we're not going to have any condo supply in the near future. And if 70% of them are bought by investors, and investors don't have money in them and they're not making money, why would they buy? So that's a problem. But when we kind of break it down into like the current existing problem, what we're going to have right now is a lot of projects that can't get off the ground, right? Like, not pun intended. It's just these pre-construction condos, they haven't hit their sales quota of 70%, have a hard time going to the bank to get financing. And you see this line over here, 70%, they're not getting off the ground. So we're going to have a bunch of projects that can't actually finish, and we're going to see how much holding power these developers have on these condos. And we're going to see kind of like foreclosures or power of sales that we saw recently with developers kind of going under, right? So this is another problem that's kind of lurking in the background that's going to cause a really bad sentiment shift for kind of condo investors, right? So that's another thing to watch out for. Now, the investors are the lifeblood of condos, and whenever investors pull back, it dramatically slows down the supply pipeline. Then there are severe repercussions in the rental unit in particular. And I've talked about this before, right? Whether you hate them or love them, investors, whether you are one or not, since after the 90s, essentially the government hasn't built any purpose-built rentals, or they haven't incentivized anybody until recent years, right? And because mom and pop kind of condo investors have made up so much of the rental pool, without them buying, we're going to have a rental supply shortage, which means that rental rates may go up. But you have to put down the backdrop, right? Immigration is slowing down. So that's something I don't know what's going to happen. We got to watch out for. But currently in the hot season of summer leasing, stuff is still going. But I think we're no longer at like 2023 rents. We're a little bit below that right now. Now, investors need to significantly have higher rents for them to be cash flow positive or neutral. And I don't think that's going to happen. Like I just said earlier, rents are going to be coming down, or they're already down. And I don't think we're going to have like a rental increase anytime soon, especially if the economy isn't doing great. And from the applications we're seeing right now on our team, a lot of people are like, rooming together, meaning like instead of having two people renting a one bedroom, they go into a two bedroom, right? So now you're taking the buyer pool, making it smaller, which means that there's technically more supply than there needs to be in the rental space, right? So that's what we are seeing right now. Although some investors are okay with cash flow negative if the unit is appreciating, but for those that aren't appreciating, they want to exit the market, which is why we see a spike in listings and resale on a record high. So if I go and look at this chart over here, if you're bleeding $1,000 plus a month and you're losing $12,000 a year, and you're also having tenant problems and maybe not appreciating, and I talked about this a few weeks ago, right, where condo investors are bleeding, it makes sense for you to get rid of it now. And the summary of that video, if you want to watch the full intro up here, essentially is you either choose to lose money very slowly every single month through cash flow negative, or you lose money fast by selling at a loss or losing some, potential what it would be worth if you sell the higher market, or you basically waited until 2028, which I'll talk about later, where we're going to have a essentially condo shortage, but you're going to have to survive that long, right? And this part, I think, is probably the most important thing when it comes to where the supply crunch is going to come from, which is saying that construction starts are trending less than 10,000 right now. We need 30,000 to 40,000 a year to satisfy population growth. So this idea of like 3.5 million homes, it ain't happening. Like, unless the government is building, it just makes no sense, and it won't happen. So when we look over here, you can see that the blue line is basically the condo sales, and the orange line is basically the condo starts, meaning like shovels in the ground, right? So you can clearly see that once blue goes up, orange goes up, and once blue goes down, orange goes down. look at the sales plummet, right? So that means condo starts are going to plummet like crazy. And if condos have a lag of 5 to 6 years, to market, that means that in 2029 to 2030 and so on, we're going to have no completions and we're going to have a huge shortage. And this is what I was saying earlier. If you're a condo investor, either lose money slow through cash flow negative right now, if you're in that position, lose money fast, sell at a loss, but exit with some liquidity and some cash, or wait till 2029 when this shenanigans is clearly going to happen, right? It's just you pick of the three. Now, they do talk about in this article how like they should be building more purpose-built rentals so that it helps with the rental supply. But the problem right now is when you look at this chart, we already had a huge surge in rentals, and I think we're going to be, having a surplus of rentals in Toronto at very least, right? And the condos are kind of leveling off. But the unfortunate thing is right now that the last few years, there was a program, and I won't get too in the weeds with it for you, but CMHC had this like super friendly financing program for anyone who's building apartment buildings, like 5 unit or plus. But they essentially on June 19th, they nixed that, right? So it's no longer available for a lot of people. And on top of the fact that interest rates have created the Precon slowdown, which creates more supply, CMHC like last month just nixed off this kind of financing program, which incentivized a lot of like big money holders to build apartment buildings. So they had very favorable financing at very low rates and like 50-year amortizations. That's out the door now too. So are we gonna ramp up for like a really big shortage of housing in like maybe 4 to 5 years? Yeah. But the problem right now is we have to get past this next 18 months of like, recessionary territory, whether in the condo space or the economy or jobs. It's going to be rough. But after we get into that, you can clearly see like the silver lining and like the light at the end of the tunnel. Like the supply is going to get really, really, really bad. So if you're able to hold on till then, wonderful. But it's can you hold on till then? That's the biggest challenge right now. So if you want to talk to me about kind of whether you can hold on to your portfolio, your condos, your house, after seeing this video, you could do so by booking a call with me using the link that's on the screen right here. It's www.chatwithzen.com. Hopefully this helps. And until next time, your move, your future. See ya. Now that you're done watching this one, how about this one or this one? You know what? Just watch them both.